Hello and welcome to the paid weekly recap for the week ending July 2nd, 2026. I'm Keith Harwood, CIO of YellowTunnel, and also pictured as Vlad Karpel, the CEO and founder of YellowTunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. YellowTunnel and myself are not investment advisors and not registered with the SEC nor FINRA. Finally, the information in this presentation is for education and information purposes only and should not be considered trading advice. I also urge you to read the characteristics and risks of standardized options available at the highlighted link. And if you need any more time with the disclosures, please go ahead and pause the recording now. Otherwise, we'll get into the recap for the week. First things first, we had the 10-year yield start to rise. So longer-term interest rates going up a little bit this week. The biggest thing with the market, it seems, for this week was an expectation that those low non-farm payroll numbers may indicate that a rate hike is not in the cards. And if a rate hike is not in the cards, the market may feel an interest in going a little bit higher. So we're at a situation where good news, a booming economy, allows the Fed to raise interest rates in order to spur inflation or stall inflation. Weak economic data puts them back into a little bit of a handcuffed mode. Now, that could lead to the conversation of stagflation if we start to see inflation rising significantly. However, right now, inflation is stable and a little bit concerning. So what did the market do? Well, the market rallied throughout the week. Friday was a bit of a choppy day, or Thursday, excuse me. We had a holiday shortened week, was a bit of a choppy day. We started a little higher, we rallied, we sold off, we bounced back, we closed around unchanged. In terms of tech, the money flow is going out. We are at the second half of the calendar year 2026. Rotation and rebalancing effects started to take control. Semiconductors sold off. Underperforming tech stocks as well as other sectors started to rally. We saw stocks like Microsoft rallying while Micron fell. A little bit of a natural rebalance. The profits that have been compounded over the course of the first 6 months of the year have broadly been based in the semiconductor sector. And so those become overweight. People need to reduce those positions in order to get back to a balanced portfolio. And there's a natural effect as a result. I think the big question for the market is that rotation rebalancing complete, or is there more to come? And if there's more to come, can we switch to a sell first market where tech starts to pull the market lower? Recently, we've seen the 50-day moving average hold for broad tech. If there is continued money flow out of semiconductors and it doesn't go into other tech sectors, that can create some concern for this market. If we see Mag 7 rise while semiconductors fall, that can offset it, certainly. But if semiconductors get sold and people don't turn to the Mag 7, the Microsofts, the Apples, the Amazons, the Metas, the big tech stocks, in order to kind of offset that money flow, we may see some further liquidation. And if we go into sell first mode, the buying that we've been seeing in small caps or industrials, more so, may stop as well. Now, small caps were looking pretty good on Wednesday, making a new high. Another choppy day on Thursday. Pushed higher, pulled lower, settled a little bit lower on the day. Overall, it doesn't look bad here, though. This market is trying to consolidate, trying to rotate, but there's a little bit of concern right now, I think, for the downside as we reach these highs, as we stop seeing money flow into the preferred stocks that have been generating much of the rally for the last few months. Finally, we're seeing the VIX come down. It's getting near these lows here. It's been hard for the VIX to get below 15. And then when we get fear, it spikes above 20. Right now, the VIX seems too low, given the potential for a bigger liquidation. We're also coming up on the next earnings cycle. That'll start up here the next few weeks. That may spur a little bit more volatility in this market, especially if we start seeing weak earnings. So there are a lot of the reasons for the VIX to be higher right now than it is. The reason for it to be low is that we're really not moving all that much. So there is a potential rationale for some fear, but behavior says, well, we're really not moving, so I don't want to go out and buy a lot of options. I think this generates some really significant potential opportunities, particularly as we're seeing the broad markets fairly stable, but individual names moving quite a bit. Case in point, Cisco looked like it was ready to rally back. Tuesday was a particularly solid day. Wednesday, we had a pullback followed by a recovery. All was looking pretty good after the rebalancing effect. And then on Thursday, as tech money flow continued, it sold off a little bit more aggressively. We started seeing some potential out of our call options held maybe held potentially or it seems maybe a little too long here at this point because on Thursday with that sell-off, the rapid sell-off, the options got too cheap to sell. So we'll look for a bounce to try to recover some premium there. But I just don't see this getting much above 118 at this point. And if we can get back up to that point, we can recover some premium and look for the exit. But for now, we'll hold on and see how it goes. On the other side, we had Colgate-Palmolive entered on Tuesday, nice rally on Wednesday, and then a burst on Thursday. Took that as an opportunity to sell out half of the position. So from the entry on Tuesday to the exit on Thursday, the stock was up 3.9%. The options were up 55% in just over 2 days. A solid return for a 2-day hold. This is the stuff that I like to start seeing. We're starting to see a lot more consistency in the AI generated signals, and I'm liking what I'm seeing. And so I expect to see more entries this week, barring a market liquidation. If we come in on Monday and the market's down 2%, changes the game. But if we're down 0.5% or up 0.5%, there should be some really solid signals coming up in the next few days. So I'm excited by what I'm seeing out of CL. I'm excited what I'm seeing about with the market. A lot of stocks that have been stable starting to break out, so their options are generally cheaper. We're seeing some good rotation, and I think that's going to generate some great opportunities, just like we saw in Colgate-Palmolive this week. Also, please do join us in the live trading room. The results speak for themselves, continuing to compound returns, continuing to perform very strongly. Please do join us. You can ask us questions about paid, AI, any of your individual stocks, however you're looking at it. Vlad and I are always happy to answer questions. So please try to join us. And if you can't join us in the live trading room, you can always email us. I'm Keith at YellowTunnel.com and Vlad is Vlad at YellowTunnel.com. Thanks again, everyone, and looking forward to another interesting and exciting week, potentially with more rebalancing or perhaps something else. Thanks again, everyone.